Hi, and welcome to Know Who Drives Return at Boardroom Alpha. I'm your host, Joanna Macris, and today we're back taking a deeper dive into autonomous driving technology. Joining us today is Pat Dillon, Chief Financial Officer at TuSimple, which went public last year in an IPO. Hi, Pat, and welcome.
Hi, thanks for having me. Great to be here.
Thank you. So let's just dive in and tell us a little bit more about yourself and your background and how you came to TuSimple.
Sure. Prior to TuSimple, I was an investment banker with Morgan Stanley. Had a long career there. I spent most of my time focused on emerging technologies in the mobility space, so alternative propulsion, telematics, as well as autonomous vehicles, and was lucky enough to have TuSimple as a client. So I started working with TuSimple in 2019 and worked with them on the last private capital raise in 2020. Which was an interesting time with the start of the pandemic to be out raising capital for a future technology. But it was a great experience for me to get really close to the team and really excited about the technology and the business model. So I was lucky enough to come on as CFO at the end of 2020 before we embarked on life as a public company in the IPO last year.
Yeah. So in December of last year, you achieved a big milestone as a company, being the first to successfully complete a driver out trucking run on an open road. So tell us a little bit more about that.
Sure. Well, this has obviously been an industry where everyone is working on removing the driver and having full autonomous operation. And it's an exciting stage in our development in that, as you alluded to, in December, we did the first run, which was an 80-mile run on open public roads in Arizona, surface streets and highways, with the truck driven entirely by the onboard autonomous driving system, no human being in the vehicle, and no teleoperation of any kind. So it's a major milestone, not just for us, but for the entire industry. We're the first ones in the world to do that and the only ones to do that thus far. And it marks a shift from, I think, being more of the core kind of technology development and the technological breakthroughs. And it marks a shifting point towards commercialization. And the task for us is going from a single driver out run, starting to repeat it, which we have done this year, and showing that we can actually scale this into a viable business, which is the task at hand for us over the next year or two. And that is a really exciting thing to go from a concept to real clear line of sight to a viable business.
Yeah. So, I mean, this is obviously not technology for technology's sake. There's a real business case for moving to autonomous trucking logistics methodology. So tell us more about what that means in terms of economics for these companies.
Sure. It may not seem obvious to everyone, but in your everyday life, just about everything that's in your home or in your office, every physical good likely traveled on a truck at some point. It's 70 to 80% of the goods in the United States travel on truck freight. It's an $800 billion market in the US alone and a $4 trillion market globally. And right now it's suffering from significant problems, both in the availability of drivers, the cost of driver wages continuing to go up, safety and environmental concerns. It's an area of our economy that is, can be significantly impacted for the better with automation technology. And so while it is a very difficult technological problem to solve in taking the driver out of an 80,000-pound semi-truck going on highway speeds, it is one where the impact of this technology can provide so many broad economic and societal benefits that it definitely substantiates the significant effort that is required to get to that point.
Yeah, I wanted to touch a little bit on the National Highway Traffic Safety Probe against Tesla, and that kind of has raised kind of some, trepidation around testing on open roads and the potential for regulatory intervention. Kind of, what are your thoughts there, and how do you see regulation of, testing self-driving cars or vehicles going forward?
Well, the government and the regulatory bodies are incredibly important stakeholders for everything that we do on this technology. We have a robust relationship with all of the relevant folks, led by Jim Mullen, who's our Chief Legal and Administrative Officer and was formerly the acting administrator for the FMCSA, which is essentially the trucking regulator and part of the Department of Transportation. The regulatory environment is actually fairly constructive when you look at a federal level, essentially a deliberately hands-off approach to autonomous vehicles for commercial vehicles. And at the state level, very constructive, proactive, either regulation, legislation, or executive order that in 26 states already actually allows for driver-out commercial vehicles under autonomous operation. Now, all of that said, there is an obligation to safety, whether it be NHTSA or the Department of Transportation at the federal level. And we take the partnership with those organizations very, very seriously. We're in regular communication with them about our driver out operations, as well as our general autonomous development. And we see this as building trust and making sure that every relevant government agency knows every step of the way how our technology is progressing, what we plan to do, and in particularly what we plan to do on open public roads where other motorists are driving alongside us. It's a serious responsibility, and we place the utmost importance around building trust with the government and the other motorists.
Yeah. So just also dovetailing on the regulatory theme, there's a lot of talk around the regulatory environment with respect to companies that have exposure to China and Chinese investors. Just one case in point, there was a SPAC merger that was called off with an autonomous trucking company Plus, due to what they called, regulatory concerns. So I wanted you to address where you are in your standing from a regulatory perspective and thoughts there.
We obviously were a global technology company headquartered in San Diego, which is where our co-founder and CEO, Xiaodi, founded the business. But we have global operations. So we do have a research center in Beijing. We do operations, autonomous trucking operations at the Deepwater Port in Shanghai, and we have operations in Europe. So we're very cognizant of the regulatory implications of being a global technology company, especially a technology like artificial intelligence and autonomous vehicles, which has national security concerns. We did go through a CFIUS review process. We disclosed that in the spring of 2021, excuse me, prior to the IPO. Our commitment has always been to transparency with the investor community, with our customers, with our partners. And it was a rigorous process going through the CFIUS review and the various agencies that make up CFIUS. They asked us a lot of questions. We provided a lot of data, and it's a very robust process. We were very pleased that earlier this year to state that the process had concluded. There were no unresolved national security concerns. And we're now in a compliance process which is, for us, as we've said, there's certainly some changes that we're making around compliance and information security. But fundamentally, it's really around the fact that our technology is being developed for specific use cases. And so the technology for China is different than the technology for North America, which is different from the technology in Europe, as you would expect. Different roadways, different types of trucks, different rules, different motorist behavior. So we've already been for several years into our regionalization of that technology. And a lot of what the compliance process for CFIUS is essentially formalizing some of those separations between the different regions.
I wanted you to touch base a little bit on the CEO transition announcement. While it certainly was planned, from a company perspective, it did meet the market with a bit of surprise. So I would just love for you to just, update investors on the reasons behind it and what this means going forward for the company.
Sure. So our former CEO, Cheng Lu, and our current CEO, Xiaodi Ho, for the last several years, when I think Xiaodi and Cheng have had a very open dialogue, as well as with the rest of the management team. And there was always, like any company like ours that's making a groundbreaking kind of new technology, the person who is in charge of developing that technology plays an incredibly important role in the company. And for the past few years, some of that could have been done in a little bit more isolation from the rest of the organization, solving big, hairy, challenging algorithm problems, or working on onboard software integration or hardware integration. But as we move from the initial driver out runs to actually operationalizing this autonomous technology for an actual customer endpoint, having really tight alignment between the tech team and the operations team and the customer team and all parts of the organization is critical. And so as a group, we decided that it did make the most sense for Xiaodi to have the CEO role and drive execution of operationalizing this technology. And so that did come, I think, clearly the market this wasn't necessarily as long and drawn out and telegraphed to the market as sometimes CEO transitions can be. But at the same time, for us, speed to market and development of this technology is always our strategic North Star. And so delaying the transition, we felt the best thing that we needed to do strategically is to make the transition more quickly, to drive execution, and to ultimately continue to extend our lead versus our competitors, because speed to market is so important to our overall strategy.
Yeah, I wanted to touch on competition a little bit because there are a number of players in this space and they're all kind of different. You've got kind of software, SaaS kind of business models, and then you do have the big behemoths like Amazon and Waymo in this space. So kind of tell us how you view the competitive landscape and where you see your edge as a company.
Yeah, it's a space with certainly a number of competitors, and it's no surprise because it is such a big opportunity. We see ourselves as being a little bit different than there are certainly some of our competitors that started off as passenger car autonomy players that have either pivoted to trucks or have added trucks as a second leg of the stool. For us, we think there's a real advantage in being focused. So ever since the company was founded, we've been focused on semi-trucks and semi-trucks only. But there are certainly others who have a different perspective and believe that it makes sense to focus on both different vehicle types. You mentioned some of the large logistics players like Amazon, who have made some announcements in the space around autonomous vehicles. And certainly there are big players, not just Amazon, that have lots to gain from the advent of these types of technologies and implementation of these types of technologies. So I think there are certainly a number of folks that will continue to be interested in the space. But I think the short story is we're not competitively focused. We know there will be other folks. We know the list of competitors will stay relatively small because it is an industry that needs access to capital and a long development cycle. It's very hard to be a startup in autonomous trucking at this point, to try and lay the groundwork and build the technology and see it all the way through to commercialization. And ultimately for us, we know there will be more. This is not a winner-take-all market. There will be more than one winner. But for us, it's really important that we're first and that we continue to be the leader, both in the technology's performance, which I think manifests itself in safety and customer service, and then building a big, dense, network-based business model that can deliver the benefits to the entire freight ecosystem.
Yeah. So you're obviously running a business and not managing the stock on a day-to-day basis. But if you look at, some of the stocks that are more in the consumer autonomous driving space, like the LiDAR companies, they had this like rise and fall. And I think for a lot of investors, they view this technology as just too early. You're not going to see commercialization for a while. Tell us why, now is a good time to look at this space, and how would you advise kind of investors differentiate between the companies in this space?
Sure. Well, we think credibility is the most important thing with investors, and being transparent. And when we set a goal, that we achieve the goal. So we were very pleased in 2021, the year of our IPO, that every major goal that we laid out in the early part of the year prior to our IPO, we were able to achieve. The most significant of those was taking the driver out by year end, which we did in December. So for us, it is about execution and delivering on the promises. We've made a new set of promises for 22 and 23 over the near term to expand from a single driver out run to many new routes, daytime operation, and getting to commercial viability by the end of the year. And we take that very seriously. The sentiment around stocks that are of new emerging technology companies goes up and down, and we certainly cannot control that part. It can be puzzling to us that when you look at it in isolation, that the company has never been better in terms of what the momentum is for our technology. Our commercial partnerships are stronger than ever, and the stock price is in a different place than where it was last year before we had some of these successes. So that part can be hard to reconcile, but I think we think about the old quote that is, in the short run, the stock market is a voting machine. In the long run, it's a weighing machine. And we're lucky enough that we have a very robust balance sheet. We don't need to raise capital anywhere in the near term at all. And so we're just focused on execution, and we believe that over the long run, the market will be efficient.
Yeah. So you as a company are moving toward a nationwide expansion of your autonomous freight network. What are some of the next milestones to get there? What's next for the company?
Well, we did our initial driver out runs in Arizona. We've said that the next big state for us to start to expand what we would call continuous driver out freight operations is going to be in Texas, which is a major shipping area. A single route between Dallas and Houston is a multi-billion-dollar market just on that route itself, which is one of the interesting things about the freight market. Is it's so concentrated in the volume and the economic activity on major freightways that being able to show that you can solve certain high density routes can create a very big business model with relatively few number of actual routes. So that's the next major steps that you'll see us from 22 and 23. We have customers like UPS who we've indicated, we've mapped our HD maps have gone all the way out to the East Coast, into Florida, into Charlotte. So we are expanding, but I think you will see that is the vision for us is, of course, to expand nationwide. But I think for the next year or two, what you will see us doing is doubling down around density in certain major freight lanes, and showing that it's not just a demonstration one time of driver out operations, but we actually are showing it's repeatable and scalable enough that we can actually support freight operations on some of these key lanes. And then the next step would be to start to expand that systematically to nationwide coverage. But it's a pretty remarkable thing in an industry where we're still the only ones to actually take the driver out once, that we're making these promises for the next year or two to actually get to limited commercialization in these major freight areas.
Yeah. Can you update us a little bit on your financial projections and what you've said in terms of guidance and what numbers people should be thinking about for you right now?
Yeah, we've given guidance for 2022. You will see our revenue increase to approximately $9 to $11 million this year. So it's not significant when you look at whether it's the amount of capital we've raised and the overall market size. What's important about our revenue is that we are not just developing our technology in isolation. A bunch of technologists who are creating what we think is the right autonomous trucking technology. We're actually working with major partners like Union Pacific and UPS, folks that have major logistics operations and fleets of thousands of trucks. And we're showing that our technology can work in real world applications. We're having two-way communication and soliciting input around how we should develop our technology and operationalize our technology. So that's really the significance of having, roughly $10 million of revenue this year is the real world application of the technology. We'll also continue to, our spending will continue to go up as we invest in the technology. 2021 was a year of significant growth in our headcount, and most of our spending and development of technology is people. It's their cash compensation, their equity compensation, and developing this technology requires top flight talent. But most of the hiring that we expect we need actually happened in 2021. So a lot of the increase in 2022 year over year is really the full year impact of the people that we brought on post IPO, which was a fantastic event for us to be able to go out and bring on a lot of real top flight talent. And we'll start to see the growth and the spending taper off here as we kind of have this critical mass to develop the technology to commercialization.
So much of the automotive supply chain has proven to be supply constrained. So I did want to touch base with you to see if you have any exposure to supply chain constraints in the way that certainly the consumer EV space has suffered.
Absolutely. We don't have, a big major commodity the way that battery cells can be for the EV space. So we don't have this big kind of supplier concentration risk. As we think about our operations for the next year or two, we certainly have dealt with headaches around the supply chain on getting things like, electronic components, things that require chips, even just getting base Navistar trucks like the one that's in my background right here. Just like any fleet operation, getting your hands on new vehicles can be difficult, even though Navistar is a major investor and partner via Traton Group. So we deal with those headaches, but they certainly have not stopped us from achieving the goals that we set out. So for the near term, I would say it's all very it's all things that are surmountable in terms of the challenges. For the long term, we're working with the automotive supply base, and we talk about this quite a bit on developing the next generation components that will go into each successive generation of our trucks. And that's things like steering and braking, LiDAR, the compute that goes on to our vehicle. So we work with the supply base also on kind of long-term development of critical components. We don't need technological breakthroughs, but we do need engineering work to move to the next generation of enabling technologies and making sure that they're progressing towards automotive grade components, which can stand up to the rigors of the trucking industry, where our trucks can operate 20 plus hours per day, which is a pretty harsh use case environment.
Yeah. Like many companies that went public last year, your stock is down from year ago levels. There was a strong sell-off on this management transition. What is the market missing here, and kind of what are your final thoughts, on what you would, or just to look at?
Well, I think if you look at the opportunity, there's never been a greater need for this technology. And if you look at the progress towards commercialization, we've done everything that we said we would do and more. And so sentiment goes up and down. It's never been more clear to us and to our partners and to the government even that this is a technology that will revolutionize the freight logistics space. It's something that is so needed. I'm of course highly biased, but if you look at where our stock has traded over the last year, it couldn't be more clear to me the significant value creation opportunity that is ahead of us. And so, yeah, we certainly are long-term focused, but we see this as a lot of value to be created ahead of us.
Yeah, fair enough. What are you doing when you're not running things at TuSimple? What do you do for fun?
Well, I live in the San Diego area with my wife and three young children. So basically, it's family and TuSimple take 99.9% of my time, and that's pretty busy life for me.
Makes a lot of sense. Thank you so much, Pat, for joining us, and we'll keep following the story.
All right, thanks a lot, Joanna.
Take care.